Most of us are taught one way to build wealth, right? You work hard, you save your money, you put some in a 401k, and hope for the best. But what if I told you the wealthiest people out there, they're not even playing that game? They're playing a completely different one, with a totally different set of rules that honestly turns the whole system on its head. So today, we're going to pull back the curtain on that very playbook. We're going to break it down into 3 simple rules that they live by. First, how to build a fortress to protect everything you have. Then, how to acquire assets so your money starts working for you. And finally, the real secret sauce, how to use the tax code as a Truesier map to make it all happen way faster.
And it really all starts right here, with this one massive shift in thinking. CPA Tom Wheelwright just nails it. For most people, taxes are the scary, complicated thing, a minefield you're just trying to get through without blowing up. But for investors, it's a treasure map. It's literally a guide full of clues and shortcuts put there by the government. Once you learn how to read that map, well, the entire game changes.
So what are these 2 different games? Well, on one side, you've got the employee game. This is where you trade your time for a paycheck, you end up paying some of the highest tax rates out there, and everything you own, your personal assets, are often totally exposed. But then there's the investor game. Here, you don't work for money, your assets work for you. You get to pay some of the lowest tax rates, and you're protected by something called limited liability. You see, the goal isn't just about making more money, it's about fundamentally changing which game you're playing. That's how you build real, lasting wealth.
So, the very first rule in this playbook, and this might surprise you, it has nothing to do with making money. Nope, it's about protecting it. Before you ever think about going on offense, you have to build a rock-solid legal fortress around yourself. This is step 1, and it is absolutely non-negotiable.
And this is exactly why it's so critical. Attorney Garrett Sutton lays out this really stark warning. See, if you own real estate or a business in just your own name, you have what's called unlimited personal liability. That means if something goes wrong, a lawsuit, an accident on your property, a creditor can come after everything, not just your business assets, but your house, your car, your life savings. It's a massive risk that no smart investor is ever willing to take.
So, how do you build this fortress? Well, the key is this powerful strategy called compartmentalization. And the main tool you use is the LLC, or limited liability company. See, instead of having all your assets in one big vulnerable pile, you put each one, like a rental property, inside its own separate LLC. This creates a protective wall around that single investment. So if a lawsuit happens at that one property, the claim hits the wall of that specific LLC. It can't get through to your personal assets, and it can't get to your other properties. It's a simple but incredibly powerful defense.
Okay, so your fortress is secure, the walls are up, now it's time to go on the offensive. And that brings us right to rule number 2, acquiring the assets that are actually going to generate your wealth.
And this right here, this is the engine of the entire system. Let's just look at a super simple rental property. You bring in $2,000 in rent. After you pay for everything to run the place, taxes, insurance, maintenance, you've got $900 left. Then you pay the bank $700 for the mortgage. But the number that really, truly matters, the one that changes everything, is that number at the very bottom, $200. That's your positive cash flow. That's the actual profit that lands in your bank account month after month.
And this brings us to this core philosophy that savvy investors live by. And Gary Keller says it perfectly. They make their money going in. What does that mean? It means they don't just buy a property and cross their fingers, hoping it goes up in value someday. They don't speculate. The profit is baked into the deal from the very first day because they bought an asset that pays them.
Now, I know what you might be thinking. $200 a month? That doesn't sound like a fortune. But look what happens when you stretch that out over a year. That's $2,400 from just one property. You've just created a brand new stream of income that has nothing to do with you trading your time. And this is how the wealth machine starts to rev up, one cash-flowing asset at a time.
Okay, so our fortress is built, our cash flow engine is humming. Now we get to the most powerful and probably most misunderstood part of the playbook, rule number 3. This is where we learn to read that treasure map and use what feel like government cheat codes to put our wealth building on hyperdrive. I want you to just let this sink in for a minute because it's a complete paradigm shift. What if the tax code isn't actually designed to punish you and take your money? What if it's really a system of rules, a set of incentives, created by the government to encourage you to do the things they want done? And when you help them out, they reward you with massive tax breaks.
So, what does the government want? It's pretty simple. They need people to have housing. They want businesses to create new jobs. They want the country to have energy independence.
Now, instead of doing all this themselves, they create tax incentives to basically partner with investors like you to get these things done. When you invest in these areas, you're not avoiding taxes. You're doing exactly what the government is paying you to do.
And the biggest cheat code in this whole partnership is this incredible accounting tool called depreciation. It lets you deduct a piece of your property's value as an expense every single year. But here's the magic part. No money actually leaves your bank account. It's often called a phantom expense. It's a loss on paper that drastically lowers your taxable income without ever touching the real cash in your pocket.
So let's look at how insane this is. Let's say your properties made you $20,000 in real actual cash profit for the year. But because of that phantom expense, depreciation, your taxable income on paper might only be $5,000. So you get to keep the 20 grand, but you're only paying taxes as if you made 5 grand. This is it. This is how real estate investors can make millions of dollars and legally pay little to no tax.
Okay, so now let's put all 3 of these rules together, because this is where the real magic happens. This is where you see how this playbook creates a powerful, self-sustaining, compounding machine for building wealth.
It's really a simple and elegant system when you see it all laid out. Your fortress of LLCs, that's your defense. It protects everything you build. Your assets, that's your offense, generating that consistent monthly cash flow. And then the tax benefits, like depreciation, they act like a turbo booster, accelerating everything and letting you keep way more of your cash to grow even faster. Each part just works together perfectly.
And what this creates is this beautiful virtuous cycle. You acquire an asset, it generates cash flow, you use the tax benefits to keep more of that cash, and then you take those profits and you reinvest them into your next asset. This cycle just feeds on itself, and with every single turn of the wheel, it gets bigger and faster and more powerful. That is a true compounding machine. But you know, it's so important to remember the ultimate goal here. The reason you build this machine, it's not just to see a big number in a bank account. The real prize here is freedom. Every single dollar of cash flow that comes in buys you back a piece of your most valuable asset, your time. This playbook is about creating enough passive income to cover your lifestyle so you can finally stop trading your time for money and start living life completely on your own terms.
So there you have it, the investor's playbook. It's that simple. Build your fortress, acquire cash-flowing assets, and use the tax code as your treasure map. The rules are out there for absolutely anyone to use. The only question left is, are you ready to stop playing the old game and start playing this one?